This video is strictly for educational purposes. PLAZM is an experimental decentralized finance protocol, which means participants carry the real risk of losing their entire investment. In the life cycle of a deflationary protocol, a specific mathematical threshold exists. It is the exact moment when the amount of tokens bought and burned daily exceeds the number of new tokens entering circulation. In traditional equity markets, this is like a company buying back more shares than it issues. But in the PLAZM protocol, this crossover relies strictly on hard-coded contract mathematics. It cannot be paused, altered, or reversed. The top line represents PLAZM's token releases, programmed to decay by exactly negative 0.08% every single day. The steady horizontal baseline below represents buying pressure. The buy and burn engine holds $66,500 in USDC, waiting to permanently remove PLAZM. When these two lines, the falling token emissions and the steady burn reserve, finally cross, the supply dynamics change permanently. The system switches from trying to stabilize inflation to continuously reducing the total number of tokens in existence. To see how close that intersection is, we have to look at the protocol's raw data as it stands today, on day 168. Today, the narrow funnel drops exactly 88,356 PLAZM into circulation, roughly $2,740 worth. Contrast this with the burn mechanism below. To date, 2.16 million PLAZM have been permanently destroyed. That equals exactly 19% of total historical supply, gone forever. Now factor in the current reserve. With the token priced at 3.1 cents, the $66,500 sitting in the buy and burn pool holds enough capital to purchase an additional 2.1 million tokens on its own. A daily release of 88,000 new tokens barely registers against a reserve engineered to swallow millions. The math heavily favors the burn. That mathematical advantage is actively accelerating. The negative 0.08% daily reduction in emissions is not a flat, linear drop. Look at how this curve behaves over time. The reduction compounds every 24 hours. Tomorrow's token release will be exactly 0.08% smaller than today's, and the next day smaller still. Over a 77-day cycle, this geometric decay chokes off new supply. We are watching a 9.05 million token supply fighting an engine that has consumed 2.16 million. While the emission side shrinks, the protocol uses a specific function called buy and grow to actively expand its purchasing power. Without requiring a single dollar of new external capital, the buy and grow engine is currently minting 3.27 new bonds every day, strictly using the yield generated by existing treasury assets. Shrinking emissions on one side, a compounding treasury generating more bonds on the other. These two opposing forces ensure the gap between supply and demand closes faster with each passing day. All of this points to a specific day on the calendar, the exact 24-hour period where falling daily emissions drop permanently below the rising daily burn rate. As this chart of total circulating supply demonstrates, crossing that axis triggers a structural change. Once emissions are less than the buy and burn rate, it is mathematically impossible for price to decline strictly from supply pressure. The total amount of PLAZM on the market stops staying flat and begins actively shrinking every single day. In decentralized finance, this creates a self-reinforcing loop. The system's automated outputs are routed directly back in as inputs. The protocol consumes its own supply. Fewer available tokens mean the protocol's yield buys a larger percentage of the market, which burns more tokens, which drives the remaining supply even lower. The architecture eliminates supply inflation entirely. The economic engine executing this loop is the central vault. This flowchart outlines the vault's internal routing. Right now, it holds a core capital value of exactly $517,000. That value is backed by precisely 11,910 individual bonds, currently priced at $43.42 each. By utilizing DexFi, or decentralized exchange finance, positions, those bonds generate a steady, automated output of $710 per day in real yield. The protocol splits that $710 three ways. The largest portion, roughly 65%, or about $462 a day, flows directly into the buy and burn mechanism for permanent token removal. The remaining funds are strictly allocated. 10% goes to buy and build to deepen the token's market liquidity. Another 20% is routed to buy and grow, smoothly compounding back into the system to purchase new bonds. That compounding process is highly active today. In a single cycle, the vault successfully generated 106 entirely new bonds, immediately increasing the system's future yield capacity. To confirm that this math will not be interrupted, we need to examine the short-term token release schedule for any massive unlock events. This 90-day predictive calendar tracks upcoming emissions. Over the next 7 days, the schedule is extremely light, with only 2,619 PLAZM slated to enter circulation. Based on current pricing, the total value of those incoming tokens is exactly $81. Within that same 7-day window, 2 full days have absolutely 0 token releases scheduled. Extending the scan outward, the calendar shows 80 continuous days with no massive institutional unlocks or cliff events. An uninterrupted calendar means the convergence process executes exactly as programmed. With no sudden supply flooding the market, the falling emissions and rising burn rate face 0 structural resistance. When you aggregate the data from day 168, a clear macroeconomic picture emerges. The overall market is currently showing strong upward momentum, with both protocol tokens actively surging over 6%. Internally, the protocol's automated reaction is scaling up, with daily bond minting tripling in just 24 hours. And the core engine backing the entire system, the central vault, has successfully crossed $500,000 in value. As this visual shows, these are not random market fluctuations. They are the predictable symptoms of 2 distinct data streams, supply and burn, approaching their intersection point. The crossover between daily emissions and daily burns is heavily dictated by immutable code. It is not a question of if it will happen, but exactly when. As always, PLAZM is an experimental decentralized finance protocol. This space carries severe risks, including the potential for a total loss of your investment capital. This video is strictly for educational purposes and is not financial advice. Always conduct your own independent research and never invest more capital than you can afford to lose.